In this video, I'm going to go over the sale of a non-current asset. And in this example, we have the sale resulting in a gain. And the reason it results in a gain is because the cash received from the sale is going to be greater than the net book value of the equipment. In other words, the equipment minus the accumulated depreciation is going to be less than what cash is received. So let's go through. We have a $16,000 equipment. It's been depreciated over the past 3 years using straight lines. So I'm going to do the formula here. 3 years times the straight line expense each year, and that is your cost, or your depreciable base, or your depreciable cost, which is your 16,000 minus the salvage value of 1,000, and the estimated useful life is 3 years. So cost 16,000 minus your salvage value divided by 3 is straight line depreciation per year, and then multiplied by 3. So the book value, or net book value, is 1,000. The amount of cash the company is getting is 1,500, as this problem says up here. As to how you record the entry in its entirety, is we've got to get the equipment off the books and its related accumulated depreciation. So basically we're going to get the 1,000 off the books by crediting your equipment. Let me do it over here. Crediting your equipment for the $16,000 that's in there. So we're going to post that. That's going to equal. And then we're going to debit the accumulated depreciation, so zero it out. Kind of like how you do closing entries, just do the opposite of whatever's in that account. And then if you look here, our debits are 1,600, or 16,500, excuse me. And the credits are 16. So we're short on the credit side, which means it's a gain, and you can see that you have a $500 gain, and it's a credit because the gains make shareholders' equity go up, and we are getting $500 more than the book value of the asset. So we're getting $1,500 for what our books are saying is worth only 1,000. So the difference is you're going to take some of those debits, if you will, and then subtract the credit of 16 to get your gain of 500. And that goes not on the debit side, but on the credit side, because credits make shareholders' equity go up. So you compare your cash collected from the net book value. If the cash is greater, then you have a gain. And if the cash was less than $1,000, we would be debiting a loss, and that difference would be over here. Hopefully that helps.